Today we're going to explore timing momentum, a powerful tool that brings together several signals into one simple visual. At a glance, you get a clear view of the direction. Timing momentum is built on 5 key indicators. Let us start by looking at the first component, the trend indicator. It functions as a band around the moving average. When the price moves above the band, it signals an uptrend. When it falls below the band, it indicates a downtrend. For example, here we can see an uptrend followed by a period of consolidation and then a downtrend. Next, let's look at the price momentum slope. This measures the acceleration and direction of price movement, showing whether a trend is gaining or losing strength. Even during an uptrend, this signal highlights periods of slowing momentum versus renewed acceleration, giving a clear view of the trend's underlying strength. Next, let's look at the price momentum slope. This shows the acceleration and direction of price movement, helping us see whether a trend is gaining or losing strength. Even during an uptrend, the signal highlights moments when momentum slows down versus when it accelerates again. Here, we can see the price gaining speed as it rallies, then slowing for a short period before continuing the uptrend. Next, we look at the relative market rank. This is a percentile ranking from 0 to 100 that compares each stock to the broader market over 4 time periods: the past month, the past 3 months, the past 6 months, and the past year. When the signal is green, the stock is in the top ranks, showing strong demand and consistent buying pressure. When it turns red, the stock falls into the lower ranks, reflecting weaker demand. On this chart, you can see how the periods of strong green coincide with the price rally, while the red zones show times when the stock lost momentum. Now let's take a look at power days. This proprietary signal combines traded value and price action with a strong focus on volume. It highlights when major players, such as institutional investors, are active in the market. Power days often reveal key turning points. Finally, we have the 20-day and 50-day moving averages. This signal helps confirm the trend. When the short-term average is higher than the long-term average, it indicates a positive trend, often followed by a strong upward move. When the short-term average is lower than the long-term average, it signals a negative trend. Here is a clear example of how timing momentum works. All the signals are green, showing strength across all signals, which confirms a strong upward trend. This combination gives high confidence in the market direction. So, timing momentum helps traders see the trend clearly. By combining all signals in one view, it shows when a stock is strong, weak, or uncertain. This makes it easier to find good trading opportunities and make confident decisions. Thank you for watching. Enjoy the platform and don't forget to do your own research.